Welcome back, everybody, to The Deep Dive. We're diving right in today, focusing on your request to break down this whole gold situation, the price of gold going crazy.
Yeah.
We're talking hedge funds making some really interesting moves, global power dynamics, all that good stuff. We'll try and get it done in the time it takes for your commute. How about that?
Sounds good.
So you sent in this article about gold maybe hitting $3,000 an ounce.
Right.
Hedge funds are going all in on this, but meanwhile, oil's heading in the opposite direction.
Yeah.
What gives? What's going on here?
Well, you've identified a classic example of what we call in the biz risk-on, risk-off trading.
Okay.
So basically, when investors, they get a little nervous about, the stock market, the economy, they start looking for a safe place to put their money, a safe haven asset.
Okay.
And gold has kind of been the king of that for, centuries, really.
The article mentioned that gold just went above $2,630 an ounce.
Wow.
That's incredible. But why gold? Why is gold considered, this safe haven, especially right now?
Well, gold has certain properties that make it, I guess, very attractive in times of economic unease, right?
Right.
Like, first of all, it's tangible. It's like you can hold it in your hand.
Right.
You know what I mean? It's a real thing.
It's not just numbers on a screen.
Exactly, yeah. And it's finite. There's a limited supply of it on Earth.
Okay.
And I think maybe most importantly, it's universally accepted as valuable. Gold has been a store of value for, millennia across, all different cultures and civilizations.
But gold has history on its side, you're saying.
Absolutely.
But it's not just everyday investors taking notice here. This article really focused on how hedge funds are going all in. They're not just dipping their toes in, they are diving in head first.
Yeah.
They hold something like 40% of what are called net long positions in gold futures.
Right.
Essentially, they're putting their money where their mouth is, betting big that gold's going to keep going up.
Big time.
So what do they know that maybe we don't?
Well, hedge funds are known for being pretty aggressive. They have these really sophisticated strategies. They have access to tons of information and data and really smart people. So the fact that they're making such a big bet on gold tells us they see some serious economic headwinds on the horizon. Think about it. China's economy is shaky. The U.S. Fed is, messing with interest rates. And then you've got all this geopolitical uncertainty.
Right.
So it's not exactly smooth sailing out there.
It sounds like they're looking at the current situation, and maybe they're seeing some echoes of the past, right?
Potentially.
Because the article mentioned this really interesting parallel. The last time the Fed cut interest rates the way they're doing now, gold shot up like 20%.
Wow.
And the stock market actually took a hit.
Interesting.
So is this a coincidence? Or should we be paying attention to this pattern?
Well, it's definitely something to keep an eye on. See, when interest rates are low, holding cash becomes less appealing because you're not really earning anything on it.
Right.
So investors, they start to get a little antsy, and they look for other places to put their money where it might grow faster, And historically, gold has been a pretty good bet in those situations.
So it's not a guaranteed win for gold every time, but it's a pattern worth noting.
Exactly, yeah. History doesn't always repeat, but it often rhymes, as they say. You got to remember, every situation's a little different.
Right, of course, yeah. So gold is looking pretty good to a lot of these big investors, but this article you sent in, it also mentioned that crude oil, that's heading in the opposite direction.
Yeah, totally different situation.
Some analysts are even saying it could go as low as $40 a barrel.
Yeah, I've seen those predictions.
That's a huge difference. What's the deal with oil? Why is it such a different story?
Well, a lot of it comes down to, you guessed it, China.
China. Because they use so much oil.
Exactly. They're like the world's biggest oil importer.
Right.
And their economy, it's not doing so hot right now.
Right.
And that has a ripple effect on the whole global market.
So less demand from China, that's putting pressure on oil prices to go down.
Exactly. If they're not buying as much, the price is going to drop. Simple supply and demand.
Okay, so less demand, that's one side of the coin. Anything else contributing to this whole oil situation?
Yeah, the other side of the coin is, supply. The U.S. and Canada, we're both producing a ton of oil right now.
Oh, really?
Record amounts. So you've got this double whammy, right?
Yeah.
Less demand and more supply. Basic economics tells you what's going to happen to the price.
It's going to go down, down, down?
Exactly. Down it goes.
So it's like these two opposite stories playing out at the same time. You've got gold, seen as this safe haven, prices shooting up.
Yeah.
And then you've got oil, potentially taking a nosedive because of all these factors.
You got it. And it just goes to show how interconnected everything is in the global economy, right?
Yeah.
I mean, something happens in China, the Fed makes a move, it all ripples out and affects markets everywhere.
It really shows you how complex and interconnected everything is, like you said. But let's bring it back down to earth for a second.
Sure.
For our listeners out there, even if they're not, Wall Street whizzes, why should they even care about the price of gold or oil? What's the takeaway for the average person?
That's the million-dollar question, right?
Well, it's like, even if you're not personally buying barrels of oil or gold bars every day, just understanding how these markets work, it gives you a little more insight into how the whole global economy is, like, ticking, right?
Absolutely. It's all connected.
So there was one more thing in this article that really caught my eye. It talked about, remember how we mentioned, like, Cold War 2.0, those rising geopolitical tensions?
Yeah, yeah.
And how that's kind of pushing investors towards gold, that whole safe haven thing.
Right, right.
But the thing that really got me thinking was, what if those tensions, what if they get even worse?
That's the big question. It's why gold is so fascinating,
Yeah.
Because throughout history, it's always been seen as this hedge against, like, major global uncertainty, war, political instability, you name it. When things get really bad, people turn to gold. It holds its value. Sometimes it even goes up.
So you're saying if this whole Cold War 2.0 thing, if it really heats up, gold could go way up.
It's definitely possible. I mean, we can't predict the future, obviously.
Right.
But we can learn from the past. Look at the 1970s, right? Oil crisis, Cold War, all that. Gold went through the roof. So, yeah, I think if we saw that kind of uncertainty again, it would be a pretty safe bet that gold would be a hot commodity.
Wow. That's really interesting. So it sounds like even if you're not a financial expert, even if you just like casually follow this stuff, understanding these bigger forces at play, it can really help you make sense of the world, right?
Totally. Like they say, knowledge is power, right? The more you know about what's driving the economy, geopolitics, all of it, the better off you'll be. You can make smarter decisions, have better conversations, all that.
Well said. Well, on that note, I think we've reached the end of our deep dive into the golden abyss, as it were.
Totally.
We've covered hedge funds, global trends, a little bit of history. Hopefully you out there listening, you learned a thing or two, maybe came away with a new perspective on why gold is making headlines and what it all means for you. And remember, the world of finance, it never stops moving. So stay curious, keep learning, and we'll catch you next time for another deep dive into, well, whatever fascinating corner of the world we uncover next.